Welcome to Mindset Matters, the official podcast of Oregon Realtors. In this podcast, we dive deep into the secrets of top-performing agents, market trends, strategies, tips, and tricks that will transform and elevate your real estate career to new heights. Follow or subscribe today, and stay tuned for a podcast that's not just about real estate. It's about mastering the mindset for success. Good morning, everyone. I'm Jenny Pakula, CEO of the Oregon Realtors, and welcome to the Mindset Matters podcast. Today, we have a very well-respected repeat podcast guest, Noah Blanton, president of WFG National Title here in Oregon. He brings more than 26 years of experience in transactional real estate and really has his finger on the industry's financial and operational landscape. He brings sharp insight into the housing market, interest rates, and what's driving economic trends both locally and across the country. If you've been wondering what's next for buyers, sellers, and just the economy in general, this is the episode for you. Welcome, Noah. Thank you for being here today.
Thank you, Jenny. It's nice to be invited.
And it's great to see you. Can you tell our listeners a little bit about yourself, what you do exactly, how you got here, all the stuff, just a little personal?
Yeah, quickly, as you mentioned, I've been doing this for about 26 years now, and I started like many of us did at the bottom in customer service and worked my way up
The bottom of what?
of our industry at the title insurance and
Got it.
and not the bottom. That's the
I
wrong
know what you
word.
meant. Entry level.
I began at the spot you would, the natural place, and worked my way up and closed for a number of years and through a series of events was very fortunate to be able to lead WFG's operations here in Oregon. And so that's what I do now is oversee our operation, our direct operation here. And this is our home market. So it's where our company started. And we're a 50 state underwriter now. And a lot has happened in the last 15 years. I'm really
Told what's happened.
Yeah, a couple
What's
things.
going on in the industry? So you started entry level, worked your way up to president, and what did you do in between all there?
So in between, I worked in sales and I closed for quite a number of years and closed through the kind of run up to '08. I got into leadership and management in '08. That was a great time to get in. And then
Sink your teeth in.
learn on the job. So that was great. Open some branches for the company, manage branches, and sort of work your way up. And done multi-state management in the industry. So just kind of after they realized they didn't want to be closing anymore, so they promoted me out of that. Said this guy's a risk. Let's get it.
So it wasn't necessarily congratulations. It might have been a condolences for your promotion.
Maybe.
Well,
Yeah.
you've seen a lot of market changes. You're well equipped to lead the company. So let's get into the nitty gritty in the market and the industry. What's happening in the real estate market these days? We can start either Oregon, nationally, specific markets within Oregon, whatever you think.
Yeah, I mean, of course, there's a lot happening, and so if we work our way maybe from the top down and said nationally, I think it's important for us, for any of us that went through the '08 cycle and the reverberation of that, for the next 8 to 12 years, and we could even argue that that cycle is still influencing the one that we're in. I think that nationally we've gone through obviously a very acute cycle. We drove interest rates down. We pulled demand into the future. We did a lot of transactions. We drove up prices. We all understand and know that that's the case. And I think the other side of that is the process we're going through now, which is 800,000 to 1.2 million fewer transactions per year. Not because there isn't desire, there is, and I think that's a key point. Is everyone still wants to own a home? That's still the goal. It's still the dream. I want my children to own a home. Everyone wants that. Desire does not equal ability, and we pull also a lot of desire into the present in 21 and 22 and 20. And so I would say that it's a fairly natural cycle. And now we have enough time behind us to be able to observe that. And
It seems like such an interesting market shift. And from some perspectives, it seems like it happened fast. We didn't have enough inventory. Interest rates were low. Prices were super high. Now there's plenty of, well, I don't know, plenty might be a stretch, but more inventory. It's just harder to get into a home because you have the affordability and interest rates, right? So homes are sitting longer. Is that why?
Yeah. Some are sitting longer, and it depends on where you're at. And so the market, I think, across this is where we got to get it down to the local, because now if you start to, look at markets across the country, some of them we would say are losing value. Some are not. And then you got to get into, if you're in a condo in Florida on the coast, that's a completely different market. And that might be the headline story, but overall, probably not the story. I would say this about this cycle. The inputs to the last cycle, the '05 up to '08 cycle, were uh, very toxic loans, low down payments, poorly qualified borrowers, uh, and a new product, the securitization of mortgages on a mass scale. And so the output was lots of extra inventory and falling prices. The inputs to this cycle were the exact opposite: high quality buyers, good credit scores, big down payments or larger down payments, fixed low rate long term mortgages. And the output is stable pricing and low transaction velocity. Exactly the opposite of the last cycle. I don't think we should be really surprised by that. The question is, well, pricing has risen to a level that transaction velocity now becomes difficult.
So, do you, and this might be really obvious, what constitutes a cycle? Is it a 3-year period? Is it just based on what's happening during that cycle? How do they determine '05 through '08?
Yeah, I think it's just probably the behavior of pricing and transaction velocity. So, and normally you've turned the corner on the cycle before everyone recognizes it. It's 11 months in the rearview mirror. Um, there is no timeline to it. I mean, the cycle we went through it, yet COVID was rapid and quick. We drove prices up much faster than we otherwise would have. They used to say the 7-year real estate cycle. I don't know if that's really applicable anymore. But that also tended to track the amount of time people used to spend in their homes. That's now lengthening. First time home ownership, the age group is
Is that because you can't find anything else to buy at a reasonable price?
it could be. I mean, it very well could be. We have all sorts of new incentives in our marketplace now. And this sort of speaks, and maybe we'll get into this, but the broader economy is we also have two classes of people in the economy today: those that did fix their largest monthly expense at a low rate over a long period of time, and those that did not. And from a consumer standpoint, one of the things that I think is interesting is the consumer went through a huge deleveraging of debt in the '08 cycle, and that was painful and it took a while. We went through another pretty significant deleveraging during COVID, where everyone lowered their monthly expense. Not everyone, but those that could and owned real estate did. And yeah, I think it speaks to why the consumer is so healthy, because many of them lopped off hundreds of dollars a month on their payment. And so it was easier for them to absorb inflation when it came. But I do think you have those two. The experience in the market is very different. If you own a home and you have a low fixed rate, your experience is very different than if you want to own a home and you want to own your first home. They almost could not be more different experiences right now. That is going to be an issue for our industry as we move forward. It is starting to become more apparent. I think it will become more acute.
Is that,
as we-
when you say an issue, is that because first time homebuyers can't afford the homes and the prices they are?
Yeah.
Or
Yeah.
with the interest rates, they just can afford a lot less home than they could 5 years
Yeah,
ago?
both. I mean, if you look at the median price in most of the markets in Oregon, it elevated and has stayed elevated. And it's, I think, stayed elevated because sellers have optionality, and their option is I can stay here in a low,
Mhm.
fixed
So what do you think
rate.
will help? What can we do to help change that?
Well, there's a couple of things that we can do, and if you look at, the market is clever and it figures out ways to make things happen. And let's just go with the most obvious. So, how is a builder helping that? A builder is necessarily having to take some of what would otherwise be profit and plow that back into making their product affordable. They can't necessarily, from a pricing standpoint, make it affordable. And sellers are having to do the same thing. I mean, if you look at, there's a renegotiation going on in my mind right now, and you can see it happening in real time. I think there's probably a little bit more, panic's the wrong word, but there's more alarm about it than I think should be occurring. But let's say, depending on the market, you got 30 to 40% of the inventory it's taking a price reduction, and you have more inventory. It's maybe 10 or 15% more. It's not a ridiculous amount more.
In
But
all price ranges?
not in all price ranges, no. We'll say, and not in all not in all product types either. So depending on the product type, but let's say if you're a first-time home buyer, there's maybe more inventory. It's more competitive in that price range for sure. You take, let's use the metro market for instance. You go to the 750 to just over a million. A lot more repricing taking place in that price
Because
strata.
it almost seems in all I don't want to say all markets because that's a generalization, but 750 almost seems like the low end for starter homes.
Yeah.
And I don't, going back to a comment you made about builders, you talk to builders and like, we can't even break ground for under X number of dollars, which prevents us from really creating affordable housing because it's not, because we're just even trying to recoup our costs with a slight amount of profit. And I know buyers don't see it that way, but they're in business.
Well, they are in business, and what they've done instead is they are offering concession in
Yeah.
order to make their product affordable. I don't think that the issue is that the builders simply refuse to build affordable product. They're building the product that they can bring to the market, and they want to sell it.
So where you see most concessions? Is it in price? Is it in product within a new home?
Well,
Blinds, fences,
for
things
for
like
builders, we would say the concession comes from credits. The builder can't really damage their price. That hurts them overall. They've got to keep the price at a point that makes sense for them to be selling. The concession comes in largely rate buy down or other types of concession. When the market was going up, the signal was prices. So it's sort of funny. This is worth spending a second on.
Yes, please.
So when prices started going up in the middle of 2020, we drove the asking price, and I'll just use the metro market, but this is true in most other markets. We drove the asking price up to 105, 106% of asking price. And we drove up from 419,000 to 550,000 at median price. And what the market was doing there was price signals were working, for the better part of 20 months until we reached a point at which the market had repriced itself. We're going through the same process now, and it's just on the other side of the cycle. And so prices are now signaling. Willing sellers or builders are signaling what makes sense for them. The only method they have to do that is price, which is what they're doing, or concession. And it's not unhealthy. It's less comfortable than when they go up. And everyone likes when they're going up, and that part of the cycle feels good. We think we understand it. And then when we need to have that negotiation on the other side, everyone's a little less comfortable with it. But it's the same process on different sides of the cycle, and prices are signaling right now. It seems healthy to me. And, I think when you get through the summer selling season, if you're a seller and you're like, okay, this didn't work for me, I signal with my price to a point of capitulation where it no longer made sense for me. And that's different, obviously, for different sellers. But you can withdraw from the market and take your low fixed rate and go home. And so I think we're just going through the natural part of the cycle, and we understood how to contextualize and say that prices going up were good. We struggle as an industry to contextualize why negotiation is good now, but it is. It is good and healthy and proper, and it will either pull or push supply in or out of the market. And that is the proper function of prices in the market. So and I know it's harder to contextualize that, but it doesn't seem unhealthy to me.
Yeah. Well, that's positive.
Yeah.
So when you said sellers have lots of optionality, which they do, they can take their home off the market and their low interest rate and go back to business. Are you finding in your industry, have you seen that happening? Because in the last few months, 3, 4, 5 months, are sellers getting realistic about price given the market shift, or are they withdrawing?
Yeah, I think that we do not see significant withdrawal from the market. What we see is 30 to 40% of the inventory, depending on the market you're in, taking a price reduction. And the seller, if they're on the market, is trying to signal, I would like an offer. And some are signaling more desperately, or desperate's the wrong word, more intensively than others are. And that's what we're going through right now. My sense of things is once we run through what the traditional selling season will be, and we'll test this and we'll watch it, will we get more withdrawals? Will the percent of withdrawals go up as sellers say, hey, it didn't work for me this time. I didn't get to a point where it made sense for me.
So, are you finding that your clients, realtors and others, are able to help sellers understand that a price reduction is critical given the market shift? Because I think that probably has been really difficult given that sellers could name their price and have multiple offers for so long.
Yeah.
Many sellers are probably kicking themselves. Why did I wait? Why did I wait? And here we are.
I think that there is a very wide skill set in the ability to contextualize the market depending on the agent. Their own confidence in their understanding of the cycle and their ability to frame that for their seller. I think there's also, as a seller, a lot of anxiety around this feeling that maybe I missed the top, but I think as a seller, and this is probably the most important conversation I guess I would have is, are you buying and selling into the same market? And if you are, everything's sort of equal. And if you had sold at the top of the market, you also would have bought into that market. And so maybe you would have paid 80 or $90,000 over asking. But I think helping sellers understand, if you're buying and selling into the same market, then you're basically at even, because you're going to turn around and do the same thing the buyer just did to you.
Are you doing lots of education for realtors on helping them talk economics, which is not easy?
Yeah, it's not easy. And all of us, we are pleasers. We want to please our clients. We want them to be happy. And I think that there is this, all of us also want to speak about real estate as a positive investment. And I think that sort of narrows in on the reason why we struggle if prices are either stagnant or negotiating to describe it as a positive investment, where it's very easy to describe it as a positive investment. You can say, hey, prices are going up 20% a year. Then some of that's about framing conversations over hold time and utility and, usage and other things. And I think we have been overly reliant, and this is my opinion, candidly, on talking about primary residential real estate as an investment. That it grows in value happens to be a nice feature of it. I don't personally think it's its primary feature.
What would you tell our realtor members, your clients, to say?
I would say that as much as you possibly can, I would talk about the need for housing, less of a conversation about the return on that asset. It's not an investment, it's an asset. And it has utility to you. You can live your life in it. And if you are buying a rental, that's a completely different conversation. And you can have the discussion around investment, but a place to live your life, a place to fix your monthly payment, a place to hedge against inflation. And if you need a place to live, it makes the most sense to buy. Are you buying and selling into the same market? And yes, you want to be prudent and careful. No one likes to, buy high and sell low, but this is residential real estate. And that shouldn't, in my view, be the primary conversation. It's an added feature that it happens to help you build wealth, which is wonderful. And it happens to appreciate in price over time. That's wonderful. But if your horizon is 12 months, maybe not so much.
Right.
And I think as a realtor, from the standpoint of how to talk about it, there's some other ways to talk about it and move away from. As an industry, we really banged on about it being an investment.
The financial return.
Right.
So more of the emotional aspect of homeownership, which is all true. That's an important component, but it competes with the dollar.
There's few, I think, unhappy people today in the home they bought in 2021. They're happy, I think. They're living their life. They have a low fixed rate. And today, what you're probably going to get is a better price, depending on the price point that you're at, you're probably going to get a little better price.
So, what's happening in markets since COVID? We know when COVID happened, people didn't have to go into the office. They left living downtown. They wanted space. What's happening to downtown markets? Not just Portland, but
Yeah.
maybe throughout the
Yeah.
state. I know it's different.
Yeah. I
Around
mean,
the state.
throughout the state, I think the country, the most of the core urban areas, it's not a question of whether, and very few of them have fully recovered back to COVID normals. The real question is, and I think how Oregon and our metro market should measure themselves is, are we recovering at least the median of the rest of the markets across the country? Urban cores were certainly damaged, and there is some I think the pendulum swings one way and the other. Oregon might have had a little bit worse time because we were already we were in the top 3 work from home states in the country to begin with. So culturally, I think we already had that as part of our work life experience.
You mean before COVID or once COVID?
Before, yeah, before we were already one of the higher work from home states. Yeah, so culturally, if that was part of what we were already doing, we just probably did a little bit more of it and have been a little bit slower to return to that. And our urban cores have not helped that. I mean, they've not done a good job at making them safe, welcoming, attractive spaces in many cases.
Is that standard across the country, or is Portland a little more prone to that description than other?
I think if you measure, different metrics, crime statistics and vacancy rates and things of that nature, Oregon's worse. I mean, our metro area is worse.
Worse than San Francisco, Seattle, other big.
Yeah, and those aren't great, but we're probably a little still.
What's it going to take to recover?
I think that if you look at Portland, let's just take Portland as a for instance, and we have this really wonderful recent example of Big Pink selling, and what it will take.
Tell the viewers what Big Pink is.
Yeah, so Big Pink is the largest office building in downtown Portland. It's sort of, we'll call it symbolic of office space downtown, and also happens to be in an area that has experienced a significant amount of the issues that are inherent in Portland. So it's a really good symbol as the largest, tower. Montgomery Park was larger in terms of actual space, but it's a very prominent tower in downtown Portland. And the same thing as in any other market is what it's going to take is pricing. I mean, prices will signal to a point where investment comes back, and we'll need some help, obviously. And I think that the municipal leaders are maybe getting there, but probably too little too late. But they have done some good things. Some of the zoning changes, waiver of SDCs. In fact, the bill that just passed is actually probably a positive for Oregon. It's a positive for high tax states in general because of the SALT deductions that returned.
Can you give a summary? That's in part of the big, beautiful bill.
Yeah.
What is a summary of how your SALT adjustment will impact Oregon? I know some of the other large high-income blue states are really affected.
Yeah. And so it allows Oregonians to deduct up to $40,000 of state and local tax, which is especially helpful to those states that have high burdens of taxes.
So it's all not just property taxes, but your income tax, or is the whole schmear at the state local?
Up to 40,000. And I think, don't quote me on this, but I think the previous was like 10.
Yes. Well, I do know.
Yeah. So that may help offset some of the decisioning around Multnomah County, specifically leaving Multnomah County, not leaving Multnomah County. Does that tax deduction, depending on your tax bracket, make it more palatable for you to stay? There's been some conversation around the absolute tax burden in Multnomah County specifically, and how high it is relative to other counties in the country, and its proximity to an alternative in Clark County. So I think that will probably be a positive for Oregon and other high tax states.
So as a result of the tax burdens now, is inventory, and I guess metro population, there's more people. So inventory availability is the highest in the Portland market. Isn't that true?
Yeah,
relative to other markets.
It is. It is, but here's the interesting thing about inventory is it is essentially today at 2019 levels. So in most of the metro markets across the state, they have just now recovered. What you're really seeing is recovery back to what we would have considered normal. Does it feel normal to us? No.
Because of the prices and the interest rates, or it's just
I think I think we would speculate on that. I think only two reasons. One, sellers have come back to the market. Let's call it in 10-15% more sellers are coming to the market for whatever reason.
now?
Now than they did last year. And let's say we're pending 5 to 8% fewer, and so you start to build some inventory. The inventory builds back up. But it looks very orderly. It looks just like a seasonal cycle would have with just a higher peak. And the peak matches the 2018, 2019 markets, and the pricing then comes in and starts to signal, well, do we reduce this inventory for absorption, or do people leave the market at the end of the summer selling season? It just doesn't look, in my mind, it probably feels worse than it looks.
So, is it fair to say, don't panic? Things are okay and things are good, and just keep plugging away.
Yeah, I would
What's the guidance you would?
I would definitely say do not panic. And there are lots of outlets and voices that make their that their product is selling views or looks or other things. And look, Portland's an easy place to beat up on. Oregon is an easy place to beat up on. We've done some really stupid things to ourselves.
Like what? Since you opened the door,
Yeah. Like the regulatory burden to build, like the tax burden on individuals, like statewide rent control, like our cat tax that went into effect in 2019, right before COVID, which probably would have had a knock-on effect anyways. Cap tax being essentially a gross receipts tax for doing business in the state of Oregon. It's commercial activity tax that you pay as a business in certain categories, whether you make money or not. These are things that we've done to ourselves. Well, I've said many times before, Oregonians and those in Portland, as it relates to social issues specifically, are generous, kind-hearted people that have been willing to vote taxes on themselves to fix the problems that they see. And one of those things has happened. They voted taxes on themselves. There just isn't, I think, the promise of, well, how come the problem that we...
it's the unintended consequences that no one thinks about.
Yeah.
So, of the things you mentioned, they're not fatal. If
No.
we can get our elected officials to see that a little reversal of a few things could help improve the prevention and the reality of living in Oregon.
And reality. And so let's go back and finish the conversation about Big Pink. So what helps? Pricing helps. Big Pink just sold for an 88% discount over its 2015 price.
88%.
88% discount.
That seems pretty high.
It sold for $372 million in 2015, I think, or 17. Would have to fact check me on that. And it just sold for $45 million.
That's significant.
Yeah. Now let's talk about what that means then. So now we've set a ceiling for prices that's 88% below the peak for office space. This is a premier office building. This isn't a gumpy little office building that, sold at a discount. This is a symbol of Portland that's repricing itself to say what, and the owners have been very clear about what their intention is. It is to slash rental rates to get to a point, because their cost basis is $45 million now, not $372. They can afford then to use prices to draw people back. And this is the
and still make some money.
And still make some money. This is the magic of prices. What had to happen in order for that to occur? The group that owned it had to take the loss. And this is the process.
So when they bought it, when did it close?
I think it was this current sale. I think it closed a week or two ago. It was 2 months after it came to the
What was the vacancy when they bought it?
I would have to go back and look. I want to say it's as much as 50%. Yeah, I think there's some significant vacancy. And it may also be that there's some planned vacancy. I know US Bank was moving out of the building, a large tenant, and they have also, the owners have also, and these are local people and people that have a connection to Oregon, which I think is important, and the city. And so they are good stewards, I think, of the building, and uh, they want to see it do well and recover. They talked about making some investments in the building. And these are the individuals that I think will work with city leaders and help them understand what it is that they need in order to create a thriving urban core, which, whether you like the urban core or even frequent it or not, it still is necessary.
Yeah.
You do need it.
Well, if you can pick up a building like the Big Pink at 80 at an 88% discount, you're just about guaranteed to make some money because it's such a large building. I mean, I know you have a lot of cleanup to do outside. Some people want to come, but you can offer rental rates. It's substantially less
Right.
than what would be typical on an urban core. So,
Well, and so what then has to happen in the city as a whole from a pricing perspective? What's the new, floor for rental rents? And once they start doing that, it will force the city to reprice.
yeah.
Or it may have some impact on that repricing that goes on. So, and I'm speculating here, but was it positive to see the building sell to someone who will be a good steward of the building? Yes. If I am a competing building, I am not feeling really good about it, right? For those owners, they're looking and saying, wait a second, this is my new competition. And the battle will be had around pricing. And uh, this is the beauty of pricing, is that it will fix the issue, and there will be winners and losers on each side of that. But
So overall, it will help the whole urban core because all building owners and property managers would really have to look at what they offer their tenants, the prices, and just making sure it's aesthetically pleasing to them outside.
Yep.
Yeah.
Yeah.
So, what would be some final tips you would give our members as they embark? And we're in the middle of the summer selling season and
Yeah.
leading into the fall. What do you envision for interest rates, for the whole schmear, all the things that are important?
Yeah, I mean, big question on interest rates. And let's say that, a lot has happened in the last 3 weeks as it relates to interest rates. The big beautiful bill passed. We don't fully, I think, have know exactly what that's going to mean. That will work itself out and have its influence on interest rates. Here's what I would say about interest rates. I'll just comment on this real quickly. The low in the last 24 months for interest rates was September of last year, when you could have gotten a fixed rate under 6%. It's a fool's errand right now, I think, to try to guess and predict interest rates. And here's what your members can know for sure. When rates are coming down, consumers think they're going to continue to come down. And when they're going up, consumers think they're going to come down. They always think they're going to come down. Interest rates are not a great signal for whether you should or shouldn't buy. And I think they should become adept at talking around that. I know it was fashionable for a period of time to say marry the house and date the rate. And that was a good strategy at the time, except for a lot of people that hasn't actually worked out. So the strategy seems a little bit, seems like a bad strategy. So find a different way to talk about that. I would say that buyers should be, this is a great time for a buyer. It sounds so trite to say this, but you have more sellers signaling willingness to capitulate on price in the market than any point in time in the last 36 months. And this is your time to be active in the market. It doesn't mean you have to go out and buy next weekend, but if you aren't active, you don't know. If I was a buyer, I would be active in the market. I would be looking, I would be decisive, and I would test a seller's willingness if I found a property that worked. And I would see whether their point of capitulation met your comfort with prices. And you may very well find that it does. Yeah. That's what I would do as a buyer. And as a seller and for agents, I think as unemotionally as possible, having a conversation around price. Homes are selling. Lots of them are selling. But this is also sort of trite to say, but your first offer is probably your best one. And you should probably make that offer work if you need to sell it.
But no, if I buy, or your role play almost, yeah. If I buy at this price, I'm never going to get equity in the home. What kind of investment is this?
Yeah. And
It's buying at a high.
Yeah. And if you bought at the peak of the last cycle, the exact same thing was said, and you've built a lot of equity over that period of time. But I would push on that a little bit and say, so then you will be a renter forever then. That's what you desire to do. And we could get into that conversation. Agents should have a little bit of a discussion as well around and be tuned into the rental market, which has an acute shortage coming in the state of Oregon and the metro market specifically. That supply line is basically dried up.
And the prices are ridiculous.
And the prices are ridiculous. You're in a state with statewide rent control. The rent is going to be raised by the maximum it possibly can every year. Economic concessions will be given until such time as they don't have to be anymore. But the base rate's going to continue to go up. So, from a housing perspective, be strategic about how you're going to meet your need for housing because you are going to need it. And let's talk through the available options. You may feel worse in 6 months after buying, but better in 6 years. And
be patient.
Be patient. And there's, on that continuum, if you go back, 15, 16 years and ask a person, you pick the time that would have been the best to buy. It's not a possibility.
Right.
And if they can help relieve some of that anxiety and return a buyer or a seller to the joy of a move and the joy of the exciting things that happen when you are either acquiring or divesting of real estate and all of the normally really positive things that are happening in life at that time, it's probably the better focus in my mind.
So if you're looking for a home, don't wait for the magic bullet. Find what works for your price range and buy now.
Yeah, and again,
not today, this weekend, maybe this weekend, but
yeah, I know it seems trite to say that, but it's historically always been true because you need a place to live.
Yes,
it's
back to the emotional part, and the financial will come.
Yep.
Yeah. Well, Noah, thank you so much for sharing your wisdom and expertise with our members. It's always so great to hear what you have to say, and our market so well. And thank you for being here, and we'll look forward to having you back.
Thanks for inviting me. Appreciate it.
Thank you.